Hello. Welcome everybody to another one of these Substack videos. No trade calls, no recommendations, and response for their own stuff. We're here for educational purpose only. So I thought we'd take a little bit of a look at some of these FANG names, right? We've been discussing this for quite some time, the fact that it looks like they've peaked, even though we've seen rotation amongst them. It really looks like there's there's a shift in momentum, and a lot of these gap ups on these AI news aren't holding. Also, the beginning of the week we talked about the structure on DXY and on and generally on the ES, and how everything favored a little bit of a pullback. Now, why is it important to have a look at the FANGman names? Well, basically is because of their weight, right, across the board in all the ETFs, and not only in the indexes, right? So again, these change, but just to give you an idea, just to make sure everybody understands, these shows you how big the weights of these top names are, both if you're looking at SPY or QQQ. So if you see these names unable to sustain upside Momo and you start to see decent pullbacks here, it's going to be very hard for the market to really hold strong, even if you do see some kind of rotation. So looking at some of these names, let's just look at them. So first of all, NVIDIA, once again, market usually tries to be supported into earnings, but right here, this pattern is anything but bullish, right? You can see here we've had this series of gap ups, right? Poor structure. Then we've got repeated negative closes, and now we've lost the 10-day moving average. Now again, we're trying to gap up here a little bit, but despite all the upside Momo and AI euphoria, this is a 6th negative day in a row. So what you want to watch closely here into earnings is, can we hold this 10-day moving average? If not, what you would be looking at, similar to the action we've seen on some of the other names, is a pullback all the way back into the 180 area. And if we lose that, then it gets very ugly, because it negates this whole kind of structure to the upside, and then you could potentially see a move all the way back to the 2025 open into the 200 DMA. So basically right here going forward, clearly bulls are still in control as long as we hold especially this breakup zone, but we're seeing some amber lights, and 180 is going to be the bull bear line. Looking at Apple is still holding fairly bid despite this double attempt to break higher and failure. What you want to look at again is the 10-day moving average. But keep in mind that once we've broken above these previous all-time highs, you see how we're starting to stall a little bit. Now, clearly any dip that gets bought into here remains bullish. All the moving averages are still in bullish configuration. So this one is still one of the better looking charts. Microsoft, we warned into earnings, this is looking extremely ugly. And you see how you had that move back into the cluster of moving averages, kind of like we just highlighted on NVIDIA. And right here, you've got this double top, bam, breaks lower, closes against below everything here, closed below the 100 DMA. Once again, this is showing you, a chart that is under pressure, and these kind of breaks, whether you look at it like this and then the double top, whether you look at it like this, it doesn't matter. The risk is that if you break down below this sideways zone, is that you unwind all of the move, and key supports are going to be the 200 DMA and the 2025 open. If you're looking at Amazon, again, they're still trying to hold a pump, still above this previous high, but on high volume, this is very ugly kind of action, right? You got a big gap up and a negative close, another gap up and a negative close. They tried to take out those highs, lower highs, and it's still hovering here. So clearly we're still in a very choppy area, and as long as we hold inside this zone, we won't have any clarity. If we break above, you'll get a lot of upside Momo and panic buying, but below there's a lot of weak structure to the downside, a lot of possible gap fills, and another one where the 200 DMA and the 2025 open attracts. If you're looking at Broadcom, still unable to hold that pump, trying to hold. This is the box similar to the one we've seen in the other charts. So again, similar kind of configuration, but stronger, kind of like Apple. Google, like Apple, very strong, still holding above those highs, but failing at that upside level. Facebook, horrible horrible looking chart, right? We've had that breakdown. And you see, this is the risk across the board, is that you've got, since you have a lot of downside gaps to fill, a lot of poor structures, if you lose the break zone, the previous all-time highs, then you get sharp unwinds. And again, with all these charts, the risk is all the way back down into those April lows across the board. Now, clearly ahead of those, you do have that 200 DMA and that 2025 open, but this is the kind of structure you have to be careful about, right? Tesla still holding good. Again, we'll have to see what happens with Elon's pay package. Palantir, another one where you keep on having these gaps that then fail. So it doesn't mean that you can't continue to go higher. You see gap up, fail, gap up, fail, gap up, fail. So it can continue, but you just have to be more and more careful when you're buying, when you're up at these levels, because there's a lot of poor structure to the downside. And if you get accelerated selling across the boards, correlation going to 1, you know, there's just better buying opportunities further down to the upside. Okay, so I just wanted to run through some of these Fangman charts, some of these big weights. And that's pretty much it, guys. Have an awesome one. Talk to you guys soon. Take care. Bye-bye.